Hey guys, how you doing? This is Coach Keyon, also known as Mr. Finance, your favorite financial educator and business coach. And today we're going to talk about compensation plan within the HGI. Well, one of the things I want to first by letting you guys know that our compensation plan is second to none. And the reason why I say that confidently, you will see today and why we do so and why we make it clear so. Now, one of the things we're going to break down, you got to understand there's compensation plan and then there's company's compensation plan, which is the providers. Now, let's talk about the first thing we're going to talk about is what is our contract level, right? Because contract level and comp plans are two different conversations. And we've got to have those conversations if you're going to understand how to really run your business. So we want to make sure that every one of you that's watching this right now, you're going to understand how your business work. And I want to talk about that. As you can see, there's well over 8 different ways we get compensation in our company, right? If you saw the BOP would have told you the multiple ways we get earned here. But let's talk about our compensation plan. As you know, we have something called a builder's plan. All right, we have a builder's plan. Those are for folks that want to build a brokerage here, right? Those are folks that want to be an owner. They want to be a person that could build a brokerage. They could recruit. They could create multiple generational overrides. They could have access to the full platform and all the great incentives and create a massive financial brokerage. Now you have HGI Direct. These are the folks that just want to come here and be agents, right? They just want to be a producer. They want to come here and sell. They want to focus on selling life insurance, right? They're licensed. They want to sell life insurance, all that great stuff. And then we also have the health, right? Those are into like health and they want to just focus on, selling health insurance or Medicare, Medicaid, right? That's that comp plan. So we're going to discuss all of this today, right? I mean, as you can see, we have a lot of incentives, right? It's very important to learn about the incentives here at HGI. We have, like I said, the builders, team builders, bonuses, right? We have a ton of bonuses in our firm. We have also the HGI Builders bonus, right? So we're going to talk about all this. RMD, if you're someone like myself with an RMD in our firm, you definitely want to get to this level right here where you can start receiving a lot of bonuses. And we're going to talk about how you get those bonuses. All right. So first plan, my favorite plan of all plan. If you're a broker, you're someone who wants to be an owner, you don't want to just be a partner, right? You don't want to feel like an employee, you're always chasing down that quarter. I will always recommend you to be a builder, right? I'll always recommend that. That's what I am. That's what I've always been. A builder, someone use a system, build a brokerage, empower people, and show them how to continue winning that money game, right? You teach people how to become a money maker. And most importantly, they focus on the impact, right? So here's the thing. Let's break down this compensation plan. Now, within this compensation plan, I tell you, really great compensation plan. And we're going to talk comp plan and contract level today. Now, the reason why it's important to understand the compensation plan, right? I just want to read this here. It says that HGI has one of the most powerful compensation and promotion plans in the market today. And the reason why Mr. Humphrey could say that confidently is because one, he's not in the business to make more money. He made money. He made money building this company. This man has built $2 billion market cap company. One of them I was proud to be a part of before I decided to join him in this venture directly. So it's not about making money for him. It's about him helping people to make money. He has a philosophy where he said, build it, share it. He says, build it, build it, sell it, share it. That's his philosophy. Build it, sell it, and then share it. And that's something he's always done. It's always about how can I build something that I can sell and then share it with the people that help me build it. So it's never about him making more money. He's very well off. So he's not here to make another couple $1 billion, but he wants to help a lot of people become billionaires like himself. So that's what makes it so amazing. So we offer a unique blend of personal contracts, very important, and then the infinite overrides, and then generational overrides, MDs and RMD bonus pools, and what I like my favorite, once again, what's called equity. Now, when you have an equity share credit program that provides many exciting ways to earn money with HGI, and I'm going to break all of these down so that we have a full, clear understanding of what does this mean, how does it work, and why does it work the way it does. Now, coming in strong, first thing we're going to talk about, let's talk about a training associate. What is a training associate? Now, a training associate is someone that starts within our program. This is a person that has no license. They have not got to our next contract level. They've not earned their promotion yet. You're brand new. You started off brand new in our company. You pretty much start off at a 30%. If you have your license coming in, or if you are a brand new person with no license, right? You're new to this industry. You come in as an associate. And the greatest way to get compensation as you're training, right? Because you're a leader in training at this point, you get what's called our scholarship program. Now, our scholarship program is really, really awesome because as you join our HGI program, you actually enroll in our RCTP, which is our reimbursement contract scholarship program. Okay. So what does this mean? Let me just give you a clear understanding of what this means. The goal is to get you from a training associate to become an associate. Okay. And by you becoming an associate, there's two ways to get there. All right. There's two ways to get there. And I'm going to break these down for you. Now, as you can see here, it tells you, if you look in the bracket where it says associate, the goal is to get you to a 45% contract within your first 30 days. All right. This is something that I accomplished in my first 7 days. If you're really serious, it's something you could accomplish within your first 7 days. It's not hard. And I'm going to show you why. When you come in our firm, the goal is to focus on getting 10 field training done in your first 7 days, right? Your first 7 days, you want to complete 10 field training. Your first 30 days, you want to educate 30 families. Now, why you do this and what's the result of it? The result of doing this properly is that you'll be able to get, well, first accomplishment, 3 recruits within 30 days, and field training sales observed in 30 days is 3. So if you're able to provide 3 solutions and get 3 business partners in your brokerage in your first 30 days, and you have submitted over $5,000 in business volume. So if you're wondering, well, what is $5,000 in business volume? Just to give you some perspective, that's about roughly like 200 or $300 in premium. So let me give you an example. If you help someone save $200 every month, right? $200 times 12, an annual premium, or what they call BV, business volume, that's actually $2,400 in business volume. So imagine if you did around 250 twice, right? So if you did $500 a monthly premium is actually around 6,000 in business volume, BV, right? So that's where you see you have to do around that in premiums per those 3 transactions. So if you help 3 people, and out of those 3 people, you did a total of $500 in monthly premium, you've surpassed the 5,000 BV, which means that if you don't have no license at this time, when you're doing these field training with your trainer, you're going to earn $1,000. Okay. You have $1,000 sitting inside of your escrow. So the minute you get your license, it actually pays out to you. So imagine you're going out in the field, learning, understanding the business, closing all solutions with your trainer doing all the work, you're learning from your trainer, and now you're in a position to observe how this is happening. And here is someone's telling you that, hey, because of your hard work, even though you're not licensed right now, hey, at the minute you get your license, there's money sitting in your escrow. That's amazing. You know how many people have got paid out escrow working with me? And that's the power of being teachable, coachable, reliable, right? And I want to teach you guys that. Now, the other thing is, if you do 3 recruits again, 3 sales, right? But you did 7,500 in business volume, you have $1,500 waiting in your escrow. All right, hands down. What if you did the same thing? 3 recruits, 3 sales, and you did $10,000 in business volume? You'd have over $2,000 sitting in your escrow. So you, at the same time, you still get to learn and earn, and you're not missing out. Most companies don't offer that. Most companies, if you don't have a license, there's not an escrow waiting for you. The sales goes to the agent, and you just get the experience, right? So this is why I said I love HGI, how it's set up, because most companies don't offer that. But here's another thing. It tells you right here in the writing. Field trainers should be MD and above. You see, in our firm, we have an integrity. We hold a very strong line with who is leadership and who's trainer. An MD is considered a trainer in our firm. RMDs are leaders. All right. And it's not because of title, but it's because of experience and understanding and skills. When you're an MD or above, and the three business case should be large enough to meet the reimbursement target. If not, only the amount set aside for the reimbursement will be released. Okay. So once again, when you're working with your trainer is not here to make money off of you. Your trainer is here to help you to make money. And if it's done properly, and most of my trainers, you guys know this already, it's always about the best interest of your trainee. All right. So reimbursement can only occur when the recruit has obtained their license and all business has been fully issued and paid. So once the business is issued and paid, not submitted, it has to be issued and paid, and then your reimbursement will be in your escrow. And guess what? If you get licensed within your first 15 days and this funds get paid out, let's say 30 days later, it's going to still get paid out to you in your escrow. So that's the transition. The goal is to get you from being a training associate to become an associate. And when you're an associate, you're now considered to be an educator. Because at this moment, you would have learned how to do the new rules of money. You would have learned how to do a fast start. You would have learned how to do the business opportunity overview. You would have learned how to do all these things, right? So that's what makes this very unique in the first 30 days to really get these things going. Now, as you continue to build on, your next promotion level is to get to becoming an RMD. Like I said, this is where you now move from an educator to become a trainer. And moving from an educator to a trainer, you're now in a great position because you now jump from a 45% contract level to a 60%. Now you may say, well, 60%, 15% increase. Well, that has a significant ripple effect upon your income. And we're going to talk about that shortly, and I'm going to show you how. Now you at a 60%. What does it take to become a MD in our firm? Well, all you need is 3 licensed associates. Okay, 3 licensed associates. You need 3 people on your team that have accomplished 3-3-30, right, to be an associate. So you need 3 people that have accomplished 3-3-30 and their license. All right, so you need 3 person that have 3 business partners within their brokerage and their license, and all you need is $25,000 in business volume. And here's the kicker. You have 90 days to accomplish this. 90 days. So imagine in your first, let's say that for argument's sake, let's say that your first 30 days in the business, you recruited 3 people, right? You got 3 people in your business. You were able to observe 3 training sales, and you did $5,000 in business volume, right? Now you have $1,000 in your escrow. That's in your first 30 days. What if the next 30 days you did the same thing for your 3 business partners where they go out and we're going to help them to do the same thing that we did for you? 3 business partners, they observed 3 sales and they each did $5,000 in business value. If I did the math right, between your first 30 days of 5 and the next 30 days, so you're 60 days in, so they got 15,000 in sales. So you have a total of $20,000 in business volume in 60 days. In your next 90 days, you have now 9 new business partners. Do you realize that you just surpassed what is required in the first 90 days and past that? Because it requires a team effort, not just you alone. It's a team effort. So that's why I said in 90 days, you become an MD if you're focused, right? 60%. You have 3 associates that's got their license, $25,000 in business volume as a team, right? That's you and your brokerage as a team. Now, if you did that in your first 90 days, you accomplish what's called marketing director. And as you can see below, there's some bonuses that's applied to you, that you can earn bonuses as well. We'll talk about the bonuses shortly. Now, let's say that you go on another 90-day run. Now, you're not going to be running for RMD. I always tell people this. You do not run for RMD. You build marketing directors and associates. Because if you focus on building associates and associates focus on building associates, then you're going to build what's called MDs. MDs is the result of building associates, because you create what's called a marketing director factory. It's a factory that produces marketing directors, right? And every year, your goal is to produce at least 3 to 9 new marketing directors in your business, minimum, right? Minimum. So if you're doing this, you're now in a position where you become an RMD, which now puts you in a position to become a leader. Leaders know how to build MDs. Trainers know how to build associates, right? And that's the domino effect of our leadership program. Now, what does it take to become an RMD? Well, you need four licensed associates. Remember, associates are those that complete 3-3-30. All right, 3 recruits, 3 sales. That's equated about $5,000 in business value. And if you're able to do this, and then you need 1 licensed MD, 1 licensed MD on your team, 1 person on your team in your brokerage that is an MD and they're licensed. Now, as a team collectively, all you have to do is $50,000 in production. $50,000 in production. You need to have a cash flow. All right. So you have 6 months. So remember, the first 90 days, if it's done right, you should have earned at least $10,000 in your first 90 days. So that means within the next 90 days that you're running to be an RMD team, you would have another $10,000 in commission earned. That would have put you at the $20,000 in cash flow, right? $20,000 in cash flow there. And then here's the great thing about our firm that makes it very unique. It tells you right here, you got a builder's exchange program, Now, let me explain this very well. This means that for you to become an RMD, you're going to what's called an exchange leg, right? It's an exchange leg between you and your trainer. In most companies, you have to give up this leg 100%. You have to give up this leg 100% to get your next contract level promotion. In our firm, you don't give up your leg completely. It's only 50%. You would receive 50%. We receive 50% as a trainer that builds you, so that way you could continue receiving these for a lifetime. So our exchange program is a 50% builder's leg. Okay, 50% up on the exchange, not 100%. Most companies going to tell you that they need 100%. Our firm is 50%. That's another reason why I love what we do, because I used to be with a firm previously that requires you to give up your strongest leg and 100% of it has to be gone. And that's the exchange to get your next promotion, right? So here at HGI, no, we're not going to have you give up 100%. You're going to only give up 50% of that leg. All right. We'll talk more about that in experience. So write that down as a question you can ask your trainer, and we'll explain that even deeper on a one-on-one. Now, as far as the bonuses, let's talk about the MDs, right? Marketing directors. Now, the bonus pool is really, really awesome. Let me tell you how this works. As an MD, our company makes a significant amount of money every month. And instead of you feeling like, man, I missed out on the whole production of the company, no, our firm says as a marketing director, you will get 1% of that total production of the entire company. Now, there's some criteria that you have to meet to qualify for that. But imagine, not only can you earn income from your own pen, but you could also earn income from the entire company's production as a whole. Now, let's break it down what this means. It says effective, started December 2024. Bonus, the pool cycle. 1% commission base put through the grid. Minimum of 12,500 as far as MD base shop issued and paid BV. So that's the minimum requirement as far as commission, right? That have to be paid and issued. Also, it says here, applies no more than $6,250 BV point from one leg, which means that you can only receive, if your team did a total of that 12,500, you can only get credited for half. You can only get credited for half, which means that you, as a leader, as a trainer, right, as an associate, as an educator, you also have to work too. You can't just rely on the back of your team. You have to put in the work as well, right? So you got to be accountable for your own productions. But the great thing is that your team production counts for half of that goal. Also, it says here a minimum of 3 base shop recruit, which means that you just have to recruit 3 people in your team, not even personal. 3 recruits in your base shop. All right. And also applies no more than if your team did all the recruiting and you didn't do none personally as a person, the half rule still applies. So if your entire team only recruited, let's say the entire 3, and you didn't do any of your own, just know that that 3 is count for 1.5. So if your team did 6, that counts for pretty much 3. Okay. So that's the whole point. You just got to understand that the half rule always apply if your team is doing all the work. So may qualify for a maximum of 3 times for the MD pool based on a life annuity and health-based business only. All right. So these are the business that count as far as what productions will be based upon. Now, as an RMD, all right, as an RMD, I get really excited about that because now you get the 3%. All right, you get 3% of the entire pool of the company's production. Effective since December 2024. The pool cycle, 3% commission based throughout the grid. So there's a minimum of $20,000 in RMD issued production. All right. So you just got to have $20,000 that's issued, honestly, and paid in the 1 month. Half rule does apply. So if your team did the entire 20, 10 is only count towards you, the RMD. So that means you as an RMD have to have 10 personally. All right. Minimum 5 recruits in the base shop. 5 recruits in the base shop. If your team did the whole 5, like I said, the half rule apply. Only 2.5 will count towards. If your team did 10, then 5 will be actually accomplished. Based upon, once again, the products that we count for this is life, annuity, and health only business. All right. And the good thing about our firm, it doesn't just stop there. All right. It doesn't just stop here at RMD at 78%. As most people say, well, 78%, that's it? Absolutely not. There's contract levels that continue to go down. I'm not going, because of time, I'm not going to be able to go over them, but I can take a screenshot. I just wanted to show you this. Our contract level goes as far as 82% as far as our personal contract level. All right. Just based upon that. These are executive promotion contract levels where you continue. All right. Right now, we are currently running to become an SEFC team. All right. So just so you know, so how do we get there? I'm going to tell you how do we get there. We need to have 15. All right. That's the third one down. I just want to tell you what our goal is for 2026. The goal is to have 15 RMDs. All right. 15 RMDs within the team. Right. 6 of them will be direct to me. I will produce 6 RMDs in 2026. We will do over $500,000 in cash flow. All right. $500,000 in production. That's paid out production within 3 months, 90 days. And $250,000 in cash flow within a 6 months grid. Everybody here should be fighting. If you're listening to this right now, you should be fighting to become an RMD and then create RMDs, right? Because RMDs, when you get the real ownership, that's when you get full ownership, you get partnership, and you're able to scale your business and sell it. All right. We'll talk more about that equity program with integrity marketing. And then generational overrides. Let's look at those overrides real quick. As you can see, we have 6 generations. All right. 6 generations. First generational override is at 15%. Second generational override is at 7%. Third generation is at 4.25%. Fourth generation is at 2.25%. And fifth generational overrides at 1.75%. And sixth generations at 0.75%. Now, you may wonder and say, well, what does this mean? Okay, so for every RMD that you produce personally, so for example, just to give an example, we have a business partner of mine. She's an RMD. She's my first generational RMD. Every time she does, let's say, $100,000 in production, if she do $100,000 in production, 15% of that override will come in no matter what. So no matter what she do, she can even surpass me. If I wanted to be an RMD and stay an RMD, she wanted to become a CEO, I will always override her 15%, no matter what. Now, if she go ahead and produce her first RMD, I will override that RMD at a 7%. And it's the same thing vice versa, right? So the good thing is that when you build your brokerage, you should have the incentive, you should have the desire to see your business partners surpass you, exceed you, and become better than you. You should never have the desire to just want to be the top person. You should always want your next person to be better than you, right? Because why? On the line, there's a reward for that type of behavior and that type of mindset, right? You, because the more money you put them in a position to make, or you help them to make, the firm set up a way that you will always make money doing that. So you always want to build your people. You don't want to hold them back. All right. You want to encourage them. You want to teach them. You want to guide them. Right. You should have that mindset to always want to see your team and your business partners win in our firm. And that's why you got to understand compensation. So I share that. That's the builders. All right. That's the builders comp. One of my favorite comp. A lot of people, when they see this, they don't understand it truly. But like I said, we'll talk more about this. But for now, I would tell you focus on these steps. Let's get you to RMD within the next 90 to 60 days, right? 90 to 60 days. So if we get you to RMD within three months, 3 to 6 months, let's get that done. Okay. That's the goal. That's the real focus right now. Right. And that's why we tell you, if you focus on educating 30 to 90 families within the next 90 days, it's going to change your business. Every 30 days, your goal is to focus on educating 30 families. If you do this, you will hit RMD in 90 days. No problem. No problem at all. It's proven, something that I've been doing. Everybody that followed it accomplished it. So, like I said, that is breaking down the builder's comp plan. Now, let's take a quick look at the producer's plan, right? The compensation plan. This is where if folks want to come here, they just want to come and sell some products and they just want to be an agent, that's fine, right? We have a space here at HGI for them as well. So, let's talk about promotion guidelines. Now, this is for only simplified issue life insurance products. For the highest compensations are shown below. These products are available to people on the HGI builder side, but are paid according to the HGI direct compensation plan. So which means that when you're a builder, you get access to this as well. That's why I say you get access to the full platform in our firm and you get paid as a HGI direct. Now, fully underwritten life insurance products are only available to HGI Builder, Promotion, and Compensation Plan. But here on the HGI Direct side, like I said, these are folks that just want to sell simplified issue products. They want to sell final expense. They want to sell low whole lives. They want to do term policies that don't require medical. These are, like I said, this is designed for those life insurance agents that's already doing that. Now, the good thing about our firm, as you can see, that our comp plan is based upon, some of your productions. And I'm going to explain this shortly and just tell you a little bit more. What does this all mean? Because what you're seeing right now are production. So, for example, coming in our firm, if you did over $2,500 in production and you do this for a series of months, you would get compensated and get elevated. So as you can see, you could build on a personal level or you can build on an agency. Once again, if you're just someone that wants to sell life insurance, you have a life insurance license, you want to produce and you want to offer simplified issue products like final expense, term, whole lives, stuff in that nature, this is where you could see that you could grow in our firm as well coming in. And so one of the things that I want to go over right here, just to give you some perspective. So either of the above issued and paid promotion requirements can be used for qualifications and agents' eligibility for promotion. If you look back for the three calendar months, their dollar volume persistency rate is 70% or better, which means that cancellation rate of 30% or less on volumes, not policy count. So for example, you can't write bad business. Let me just put it in layman terms. All right. You cannot write bad business. You got to write business that's going to stick on the books, that's going to be persistent. It's going to be good business. You can't just sit here, sell a client a horrible policy or solutions just to make a commission here. Companies will drop you here immediately. If you do bad business, you will lose your contract. You will lose that. All right. There's no bad business here. We hold a very high integrity, and we're gonna hold you to that integrity at all costs. You're gonna always have to do what's right for the client. That's what right for your pockets. All right. Our firm does not play around with that. We always hold a very strong on integrity here. And I will always encourage you do what's right at all times because it'll be the quickest way you can lose an opportunity with our firm. All right. Now, as far as breaking down the comp plan some more, it says here after an agent's first 3 months in business or one particular partial month and 2 full calendar months, an agent may advance within the same 70%, as far as persistency requirement, because a 3 month calendar look back period doesn't exist. Therefore, if 80% of those policies written in the first calendar month of business are still in force, policy count, and not actually production volume, they can be advanced. So, like I said, if you do good business in your first 3 months or your first month in business, and then 3 months later those policies are still standing and you're running for your promotion, they'll actually work and count towards that promotion. After each promotion, an agent is eligible for another promotion within 3 calendar months and every month thereafter until the next promotion is achieved. An agent must maintain production to stay at their current level. If an agent missed production 3 months in a row for their current level, then a one level reduction occurs automatically in Aristotle. The agent then must re earn the previous promotion. Yes, and this is why I tell you one of the things that I love about being a builder, you don't have to worry about that. But when you want to become an agent and you want to sell life insurance, these are the requirements in our firm that you have to requalify. You can't just hit it and stop. Okay. No, you're going to constantly. So I personally always encourage people to be a builder. But if you're an agent, you don't mind selling, you like that type of stuff, more power to you. Right. I encourage it. Skip promotion levels. Yes. Are you off to a great start? Promotion levels can be skipped up to level 4 if higher requirements are met. Above level 4, an agent can only advance to the next level every 3 months as specified. Generational overrides. Yes. Does it apply here as well? Yes, it does. A 2.25 generational override is paid on level 1 and 2. All right, on level 1 and 2. Now, roll up debt protection. This is one of my favorite. In most companies do not have this. And I could tell you that firsthand when I was with a previous company. And I love what HGI put in place here because it's very crucial when you're a leader and you're going to be in my position one day. If you work really hard and stay consistent, you will be in my position where you're going to have hundreds of agents, and you don't want to be in this position. You don't want to be in a position where an agent write bad business, quit the business, and then you're left with that bill. Absolutely not. HGI fixed that problem here. Here's what HGI have done. HGI have put in place where 20%, all right, 20% of your commission that is paid are withheld in an escrow until 3,000 threshold has been met. When there is a chargeback, it will be recovered against the escrow, and future commissions will again be withheld at 20% until the reserve of $3,000 is met, which means that if you have an agent that write bad business and let's say they quit, and let's say that they had a $2,000 in chargeback, right? They didn't have no desire to pay it back out of their pocket. They quit and jumped to another company. That's fine. HGF put something in place where every agent would have to reach that goal of $3,000 in that escrow. So if they quit, no worries. The agent that's left behind, that's committed, dedicated, is not left on the hook to pay someone else's debt for their bad business. No, HGF put something in place to protect every leader here, so that way bad business that's written by bad agents and they quit on you, you are not left with the bill, right? It's like someone skipping out on dinner and leaving you to pay the tab. Okay, so you don't have to worry about that here at HGI. And yes, we do receive renewals. All right, renewals are really awesome because this is where you help a client put together a strategy and you get compensation for it from the company. The company will continue paying you because that's your book of business. Now, here you own your book of business, by the way. You own your book of business, you always get compensation on it. So renewals are paid on the following products: American Amicable, Corebridge, Mutual of Omaha, and the Great Western. As you can see, they show you their renewals. It's about 1% paid on level 2 through 8, 1% paid on level 3 to 8, and renewals paid on writing agents only. As you can see here, it's around 2%. All right, when you're in level 1 and 2, and 3 to 8 is 1%. So that's something to know. So general promotion rules, as you can see here, commissions are paid based upon the amount that is paid to the HGI grid, all business volume, and the business volume must be issued and are net of chargeback. Okay. So like I said, take a screenshot of this. It's very good to know this, and we'll go over this some more and break it down just for time's sake. So these are some of the companies. I just wanted to show you some of the companies. And let's talk about commission, because this is good. This is the part that I wanted to get to. A lot of people always say, hey, my company give me 80%, 120%. Okay, I always ask them of what? So here's the example of this. In our firm, as you can see, different company, different contracts, all right, and different commissions. So let's go to the lowest commission, all right. In this company, American Amicable, right, one of my favorites, by the way. If you used to offer a term policy here to this couple or to a family member, this company will pay you at our lowest contract level in our firm, if you just want to be an agent, 102.5%. All right. That's how much you're getting compensated. 102% and 0.5. All right. If you're offering that term. If you want to help the client, and once again, this is the lowest contract. As you can see, the contract goes up every time. I'm just showing you the lowest, right? Based upon each product. So if you was to do a final expense a whole life, right? It's called Guarantee Guardian. The lowest you get is 52.5%. 60 if you're doing a Platinum Solution Legacy Everest package, right? 60.0%. What if you're doing a final expense whole life for senior choice final expense, 90%, 55, right? This is the lowest. So this is entry level coming in our firm, right? As you grow, you can see that your compensation grow as well as you grow. That's one company. Coming down here, this is American Amicable. They have a ton of products, like I said, coming in. These are entry level. You can see here, home protector. If someone has a mortgage, you can give them home protection there. So I'm just going to run through these. Like I said, all this information is in your back office, guys. It's in your back office. All right. These are Corebridge. Like I said, I'm just running through it due to time. All right. This is Corebridge, Mutual of Omaha. All right. These are simplified issues. These products does not require medical. All right. They don't require any medical, just applications. But I just want to show you them. So as you can see here, coming in, when you're at a level 12, you're pretty much a training associate. As an associate, you're at 11. MD, you're at 10. RMD, you're at 8. SEVC, as you can see, the same contract builder level from the HGI back office. And that's why I said all this information is available to you here. All right. So all the different contracts is available here. I want to show you something really quick. And why I tell you that's very unique. You got to know how much percentage of what. All right. I want to show you this really quick. This is underneath compensation. You go to business, click on compensation schedule. If you're someone that come in our firm, all right, and let me open this up because I want to show you this. This is very, very powerful information to know right here. If you're working with a company and it's a life insurance company, I'm going to go to a company that I like to use a lot, right? They provide great protection for families, but also give you a great compensation plan as well. And it's with North American. And let me come down here to North American. I want to show you guys something very, very unique. Very, very unique. Because when you do good business, you're going to get compensated in a great way if it's done right. All right. Very, very important. So I just want to show you guys this. North American. As you can see, many companies are in our pipeline here, right? So there's never a time where you could ever sit down and say, hey, I don't know how to help a client. See, we have too much products. All right. We have a lot. All right. Here we go. All right. So I want to show you guys something really quick. Very, very important. You see this right here where it says 100%, 100%. This means that if you're at a contract level, like I don't even want to use mine. Let's take me out of the equation. Let's use an entry level contract level. Let's use 30%. All right, 30%. If you're 30%, it means that you get 100% of whatever of the 30% of 100%. So for example, when you sit down with a client and the client saves $200 a month, $2,400 every year, $2,400 is what's called your target premium. All right. That means you will get 100% of this target premium because they're going to give you 100%. So you get 100% of that 30% that you will receive. So if your contract level is at 30%, right? 30% of this is this. If you pull out a calculator, you see for yourself. 30% of 2,400, right? Let's do the math real quick. 2,400 times that by 0.3. That gives you 720. So as you can see, you get 100% of that 720, right? Because that's your contract level. Let's say that you're at 45%. What is 45% of 2,400? 45% of 2,400 is $1,080, right? $1,080. They say that, hey, we'll give you 100% of that, okay? But let's say that you work with a company, right? Because it's not every company. Because you see, if you was to offer a term product, that's 90% off your contract level, right? So that's why you want to grow and become, let's say, a 78%. 78% of 2,400 is 1,872. You get 100%. That's just one of the companies that we represent. There's many of them that gives you over 100%, 90%, 52. This is what I look for when I talk to companies. How much is the contract, right? I always ask them, what is the commissionable base for each product based upon the contract? So if someone wants to say, hey, Keyon, our company is giving us, let's say, I don't know, let's say they say, hey, we give you 115%, right? Now, if it's 115% upon 100%, what? That's amazing. That's a great deal. But I always say, tell me how much is your commissionable base rate for each product that you offer. That's what I want to know, right? That's what I always want to know. That's how I compare who's really, really better. Because if you're getting 115% upon a product that has 2,400 in commission target premiums, and you get 100% of that, that's a great deal. But most companies, they don't have these kind of deals with companies at all. And especially not at their higher contract. That's why most companies have to give you a higher comp plan because they're probably receiving, like, say, 56 commissionable base, right? So they got to make up for that. So they have to give you a higher comp So that way you can get a $1,500 because they had a low commissionable base with the company. Right. So very, very crucial information to know right there. So like I said, go around here, play with it, get a chance to understand how your money works, understand commission. Like I said, if you have any questions, we'll break this down even more, give you a deeper understanding, because it took me a few years to understand this fully, but it really changed my life when I did, because it made me truly understand compensation and understand the difference between contract levels and commissions. All right. So with that said, guys, keep learning, keep advancing, and remember, you're one decision away from changing your future for the better. So always remember that choice is always yours. If you have any questions, get in touch with your trainer or myself, and we'll break this down even further, so that way you can get a deep understanding. Until next time, see you at the top.